Based on the historical data and forecast, Bitcoin has been exhibiting a downtrend with increased volatility. The RSI consistently remains below 80, indicating the asset is not overbought, while dipping below 20 on several days, suggesting periods of oversold conditions. The Bollinger Bands show a widening range, confirming the increased volatility. Considering the support price of $85,500 and the forecast for the next week, I propose a contrarian strategy focusing on capitalizing on short-term bounces. Specifically, when the RSI falls below 37, we will initiate a long position with an entry price of $85,700. A stop loss will be placed at $85,000 to limit potential losses, and a target price of $88,000 will be set to capture a potential rebound. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of the Bollinger Bands while the RSI is below 37, it signals a potential buying opportunity. We will enter a long position at $85,400, setting a stop loss at $85,000. The target price for this trade will be $86,000, aiming to profit from a move back towards the middle band. This combined RSI and Bollinger Band strategy aims to identify high-probability entry points during periods of temporary weakness, maximizing returns while effectively managing risk. Based on the historical data and forecast, Ethereum has shown a downtrend. The RSI consistently stays below 60, indicating a lack of strong bullish momentum. The forecast data further reinforces this downtrend, predicting prices to continue decreasing. Considering the support level at $2,940 and the forecast, I recommend a short selling strategy. Enter a short position at $2,970. Set a stop-loss order at $3,000 to limit potential losses if the price unexpectedly reverses. The initial target price is $2,870, aligning with the forecast for December 30, 2025. To refine the strategy, incorporate the Bollinger Bands. When the price touches the upper band, it indicates a potential shorting opportunity. However, given the overall downtrend, I prioritize the RSI and forecast. If the price falls below $2,870, consider adjusting the target price to $2,890. This adaptive approach combines technical indicators and forecast data to maximize potential returns while managing risk effectively. The combined strategy provides a clear entry, stop loss, and target price, enhancing the probability of a successful trade. Based on the historical data and forecast, BNB exhibits a downtrend with support at $831 and resistance at $896. The RSI fluctuates between 37.2 and 47.4, indicating periods of oversold and overbought conditions. The Bollinger Bands show a narrowing trend, suggesting potential volatility. Considering these factors, I propose a short selling strategy with a focus on the forecast period. Entry price will be $842, placing a stop-loss order at $855 to limit potential losses. The initial target price is set at $822, aiming to capitalize on the predicted downtrend. To refine the strategy, I incorporate RSI and Bollinger Band signals. When the RSI falls below 40, consider a short entry. If the price touches the lower band, it's a buy signal. If the RSI exceeds 80, it's a sell signal. The final portfolio will be a combination of these three strategies. The final target price will be $821. This approach balances risk and reward, leveraging technical indicators to enhance decision-making and optimize returns. Based on the historical data and forecast, XRP shows a downtrend. The price has been fluctuating between a support of $1.81 and a resistance of $2.03. The RSI consistently stays below 50, indicating a bearish momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week predicts further decline, reaching as low as $1.79. Considering these factors, I recommend a short selling strategy. We will enter a short position when the price touches the support level of $1.81. The stop loss will be set at $1.86 to protect against unexpected upward spikes. The initial target price will be $1.79, aligning with the forecast. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, it could be a temporary dip before a further decline. If the price touches the lower Bollinger Band, it suggests a potential short-term bounce. However, given the overall downtrend, we will maintain a short position. We will enter a short position at $1.81, set a stop loss at $1.86, and target $1.79. If the price reaches $1.79, we will consider taking partial profits and re-evaluating the trend. This blended strategy combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a downtrend, with a recent dip below the lower Bollinger Band, suggesting potential oversold conditions. The RSI consistently remains below 50, indicating a bearish momentum. Considering the forecast price for the next week predicts a continued decline, reaching $119, I recommend a short position. Enter a short position at $124, placing a stop-loss order at $126 to mitigate potential losses if the price reverses. A reasonable target price would be $119, aligning with the forecast and the support level. To refine this strategy, we can incorporate the Bollinger Bands. If the price touches the lower band, it could be a signal to enter a short position. However, the price has already touched the lower band. Therefore, I suggest waiting for a slight bounce and entering at $124. The stop loss should be set just above the middle Bollinger Band, at $126. The target price should be $119, coinciding with both the forecast and the support level. This combined strategy leverages both momentum indicators and volatility bands for a more robust risk-reward profile. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within the 0.279 to 0.288 range. The RSI consistently stays above 33.2, indicating that the asset is not severely oversold. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the current RSI of 53.1 and the forecast prices hovering around 0.284 to 0.287, I recommend a moderate long position. The entry price should be $0.284 with a stop-loss placed just below the support level at $0.279. The initial target price is $0.287, aiming to capitalize on the predicted short-term increase. To enhance the strategy, we can incorporate a trailing stop-loss. Once the price reaches $0.287, move the stop-loss to $0.284 to lock in profits. If the price continues to rise, consider a second target price of $0.288, near the resistance level. However, if the price falls back to $0.279, exit the position to minimize losses. This approach combines the RSI and Bollinger Band signals with support and resistance levels to create a balanced and adaptable investment strategy. Based on the historical data and forecast, Dogecoin exhibits a downtrend, particularly evident in the recent price action and the forecasted prices for the next week. The price has consistently traded within a range between $0.122 and $0.139. The RSI consistently stays below the 50 mark, indicating a lack of strong momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.132. The stop loss will be set at $0.139, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.122, aligning with the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, we will hold the position. If the price touches the bottom of the Bollinger Bands, we will hold the position. If the price reaches $0.122, we will take profit and secure the gains. This tiered approach combines trend analysis with technical indicators to maximize profit potential while managing risk effectively. This strategy aims for a high return by capitalizing on the current downtrend and utilizing technical signals for precise entry and exit points. Based on the historical data and forecast, Cardano is showing a downtrend. The price has been consistently below the Bollinger Band's middle line and the RSI is frequently below 50, indicating weakening momentum. The support price remains steady at $0.351, while the resistance fluctuates but hasn't been consistently breached. The forecast for the next week predicts a continued decline, reaching as low as $0.335. Given this bearish outlook, I recommend a short position strategy. Our entry price will be $0.363. We will place a stop-loss order at $0.37, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.343, aligning with the forecast for the week. If this target is hit, we can consider a trailing stop-loss around $0.35 to protect profits and potentially capture further downward movement. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a volatile trend with periods of consolidation and upward movement. The RSI indicates the asset is currently within a neutral range, fluctuating between 50 and 63.5. Considering the recent price action and the forecast, I recommend a moderately bullish strategy. We will enter a long position at $573, coinciding with the first forecast price. Our stop-loss will be set at $557, just below the forecasted price for December 25, providing a buffer against short-term dips. The target price will be $616, aligning with the upper Bollinger Band, representing a potential 8.2% gain. To refine the strategy, we will incorporate Bollinger Band's analysis. If the price touches the lower band around $557, which is also our stop-loss, we exit the position. If the price breaks above the upper band of $616, we will consider taking partial profits and adjusting the stop-loss to protect gains. This combined approach, utilizing both RSI and Bollinger Bands, aims to capitalize on upward momentum while mitigating risk. The overall portfolio will allocate 60% to this long position, with the remaining 40% held in cash to allow for opportunistic entries if the price retraces. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend, with a clear support level at $3,190 and resistance around $3,260. The RSI consistently dips below 50, indicating weakening momentum. The forecast for the next week predicts a continued decline, reaching $3,130. Combining these signals, I recommend a short selling strategy. We will initiate a short position at $3,230. To manage risk, place a stop-loss order at $3,260, just above the resistance level. The target price will be $3,150, aligning with the forecast and a conservative profit target. To enhance the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, given the overall downtrend and bearish forecast, we will maintain the short position. If the price touches the lower Bollinger Band around $3,130, we will consider taking partial profits at $3,170. This combined strategy leverages both RSI and Bollinger Bands to maximize profit while managing risk, providing a well-rounded approach to this volatile asset. Based on the historical data and forecast, Quant exhibits a downtrend, with prices fluctuating between a support of $72.2 and a resistance of $80.7. The RSI consistently remains below 50, indicating weakening momentum. The forecast suggests a continuation of this downtrend, with prices hovering around $74.2 to $74.8. Considering the RSI, we will implement a strategy based on oversold conditions. When the RSI falls below 36.5, we will enter a long position. For example, when the RSI is 35.0 on December 20, 2025, we will enter a long position at $74.3 with a stop-loss at $72.2 and a target price of $77.2. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, reinforcing our RSI-based entry. However, given the overall downtrend, we will be cautious with our targets. We will prioritize capital preservation. A combined strategy will involve entering a long position when the RSI is below 36.5 and the price touches the lower Bollinger Band. For instance, on December 23, 2025, the RSI is 35.0 and the price is near the lower Bollinger Band of 68.0. We will enter a long position at $74.7 with a stop loss at $72.2 and a target price of $75.6. This approach balances the signals from both indicators, aiming for modest gains while mitigating risk in a declining market. Based on the historical data and forecast, NEXO exhibits a downtrend with periods of consolidation. The RSI consistently dips below 50, often entering oversold territory below 35, indicating potential buying opportunities. The Bollinger Bands show that the price has been trading near the lower band for a while, suggesting a potential bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term pullbacks. I will enter a long position at $0.931 with a stop loss at $0.901, just below the established support level. The target price will be $0.975, aligning with the recent resistance level. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI reaches $34 or lower, signaling an oversold condition, and the price touches the lower Bollinger Band, I will enter a long position at $0.932. The stop loss remains at $0.901, and the initial target price is $0.939, near the forecast high. If the price reaches $0.939, I will adjust the stop loss to break even to protect profits and consider a second target price of $0.975. This combined approach balances risk and reward, capitalizing on potential reversals while mitigating downside exposure. Based on the historical data and forecast, PAX Gold demonstrates a clear uptrend. The price has been consistently rising from $42.40 to a forecast of $4,740, supported by increasing RSI values, which peaked at 86.2, indicating strong buying pressure. The Bollinger Bands have also widened, suggesting increased volatility and a potential for further price appreciation. Given the current RSI above 80, indicating overbought conditions, we will employ a strategy that combines RSI and Bollinger Bands to capitalize on potential pullbacks. We will initiate a long position at $4,520+, placing a stop loss at $4,480+ to protect against a sudden reversal. Our initial target price will be $4,600+, aiming to capture a significant portion of the projected upward movement. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, we will consider adding to our position at $4,520+. Conversely, if the price touches the lower Bollinger Band, it could also present a favorable entry point. The ultimate target price will be $4,740+, aligning with the forecast high. This diversified approach, combining trend analysis, RSI signals, and Bollinger Bands, aims to maximize returns while effectively managing risk. This portfolio will be rebalanced daily to adapt to changing market conditions and optimize performance. Based on the historical data and forecast, Cosmos Hub exhibits a clear downtrend. The price has consistently traded near the support level of $1.94, with the RSI fluctuating between 27.9 and 38.4, indicating oversold conditions. The forecast for the next week predicts a continued decline, with prices ranging from $1.9 to $1.85. Considering these factors, I recommend a short position strategy. We will enter a short position when the price touches the support level of $1.94. The stop loss will be set at $1.97, just above the recent resistance, to limit potential losses if the price unexpectedly reverses. The initial target price is $1.85, aligning with the forecast low and a significant drop from the entry point. To refine this strategy, we'll incorporate the Bollinger Bands. When the price approaches the lower band around $1.85, we'll consider taking partial profits and adjusting the stop loss to break even. This will secure some gains while allowing the trade to continue if the downtrend persists. The final target price will be $1.8, anticipating further downside momentum. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on the prevailing downtrend while managing risk effectively. This strategy aims for high returns by leveraging the current market conditions and technical indicators. Based on the historical data and forecast, Filecoin has been exhibiting a downtrend with considerable volatility. The RSI consistently hovering below 40 indicates oversold conditions, suggesting potential for a short-term bounce. The Bollinger Bands show the price nearing the lower band, further reinforcing the possibility of a reversal. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a short-term upward correction. We will implement a combined strategy using RSI and Bollinger Bands. The entry price will be $1.16, coinciding with the forecast price and the lower Bollinger Band. The stop loss will be set at $1.12, just below the forecast price and the lower Bollinger Band, to limit potential losses. The target price will be $1.3, aligning with the recent resistance level and a reasonable profit target given the current downtrend. To refine this strategy, we will incorporate a dynamic adjustment based on RSI. If the price rises and the RSI reaches 60, we will consider taking partial profits and tightening the stop loss to $1.26. Conversely, if the price fails to move upwards and the RSI remains below 30, we will exit the position entirely. This combined approach leverages the predictive power of both technical indicators to maximize returns while minimizing risk. The portfolio will consist of 60% of the strategy using RSI and Bollinger Bands and 40% of the strategy using RSI. This allocation balances the potential for profit with a degree of risk mitigation. Based on the historical data and forecast, TRON has been exhibiting a downtrend since December 10, 2025. The RSI consistently remained below 50, frequently dipping into oversold territory below 40, indicating weakening upward momentum. The Bollinger Bands also reflect this trend, with the price consistently near the lower band. Considering the forecast for the next week, the price is expected to remain around $1.45 to $1.47, suggesting the downtrend will continue. Therefore, I recommend a short selling strategy. We will initiate a short position when the price reaches $1.47. The stop loss should be set at $1.49 to protect against unexpected upward movements. The initial target price is $1.44, near the support level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we can consider covering a portion of our short position at $1.45. Conversely, if the price touches the lower Bollinger Band, it might signal a potential bounce. In that case, we can adjust our target price to $1.43. This combined approach of trend analysis, RSI, and Bollinger Bands should help maximize returns while managing risk effectively. The portfolio will be 60% short selling, 30% RSI signal, and 10% Bollinger Band signal. Based on the historical data and forecast, Starknet shows a clear downtrend with consistently decreasing closing prices. The RSI consistently remains below 50, indicating a bearish momentum, with values frequently dipping below the oversold level of 20. The Bollinger Bands are contracting, suggesting decreasing volatility, but the price has been consistently trading near the lower band, reinforcing the downtrend. Considering the support price of $0.0788 and the forecast predicting further declines, a short selling strategy is warranted. I recommend entering a short position at $0.0802. Place a stop-loss order at $0.0836, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. Set a target price at $0.0711, aligning with the forecast for December 30, 2025. To refine the strategy, we can integrate the RSI indicator. When the RSI drops below 30, it signals an oversold condition, which might present a good entry point for a short position. However, given the strong downtrend, maintaining a short position is preferable. The Bollinger Bands also provide valuable insights. When the price touches the lower band, it indicates that the asset is relatively undervalued, and a short position might be considered. Therefore, the most efficient portfolio would be a short-selling strategy with an entry price of $0.0802, a stop-loss price of $0.0836, and a target price of $0.0711. This approach combines technical indicators and price action analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a downtrend with increased volatility. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast prices further reinforce this downward trajectory, predicting a decline to $0.201. Combining these factors, I recommend a short position strategy. Entry price should be $0.211, with a stop-loss set at $0.235, just above the resistance level. The initial target price will be $0.201, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, around $0.19, it signals a potential oversold condition, which could be a buying opportunity if the downtrend pauses. However, given the prevailing bearish sentiment, I will maintain the short position. If the price reaches $0.201, take profit. If the RSI falls below 30, consider covering the short position to avoid further losses and reevaluate the market trend. This portfolio prioritizes capitalizing on the current downtrend while incorporating risk management through stop-loss and target price levels. Based on the historical data and forecast, Algorand demonstrates a clear downtrend. The price has been consistently declining from $0.135 to $0.107, with the forecast predicting further decrease. The support price remains stable at $0.112, while the resistance fluctuates around $0.115, indicating a limited upside potential. The RSI consistently hovers below 35, indicating oversold conditions but not necessarily a reversal signal. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential continuation of the trend. Given this analysis, I recommend a short selling strategy. The entry price for the short position should be $0.11 on December 24, 2025. A stop-loss should be set at $0.112 to protect against a potential false breakout or short-term reversal. The initial target price should be $0.107, aligning with the forecast and recent price action. If the price reaches $0.107, consider moving the stop-loss to break even to secure profits and potentially ride further downward momentum. A final target price of $0.108 can be set, anticipating a potential bounce off the lower Bollinger Band. This strategy combines trend analysis, forecast data, and technical indicators for a high-probability short trade. Based on the historical data and forecast, Arbitrum has shown a volatile trend with periods of both upward and downward movement. The support price consistently remains at $0.176, while the resistance fluctuates around $0.194. The RSI values have mostly been below 50, indicating a generally weak momentum. The Bollinger Bands suggest periods of contraction and expansion, reflecting the price volatility. Considering these factors, I recommend a cautious strategy focused on short-term gains. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 35, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.176. A stop-loss order will be placed just below the support level at $0.17 to protect against further downside risk. The target price will be set at $0.194, aligning with the resistance level. If the RSI rises above 70, indicating an overbought condition, and the price touches the upper Bollinger Band, we will initiate a short position with an entry price of $0.2, a stop-loss at $0.21, and a target price of $0.18. This approach aims to capitalize on short-term price fluctuations while managing risk through strategically placed stop-loss orders.